Well, good evening, ladies and gentlemen. Welcome back to Rainbow Investing, where we examine a spectrum of ideas to improve your long-term wealth. My name is Sebastian, and today we are looking at the current stock market crash, the 2020 crash, and how best to deal with it. So just before we get started, I would love to earn a subscribe from you or even a humble like. I think it's very important to spread some positive content about stocks and the markets at this very difficult time, and subscribing to my channel or disliking this video is a really easy way to help do that. But let's get down to it. So this is now turning out to be a full-on stock market crash, something we haven't seen since the global financial crisis back in 2008 and 2009. Now, for those of you who might already have some shares in the markets, it's a very, very scary time. Don't get me wrong. You're almost not human if you don't feel a little bit of apprehension, at least, at seeing the value of your stock market portfolio go down by such a large amount. I myself am certainly not immune to this at all. Now, I won't say that this is a make or break moment for anyone's portfolio, because the reality is that if you do absolutely nothing, you'll probably end up just fine, in the long run anyway. But there is a right way to invest at this time, and there is a wrong way. And moments like this can be very, very dangerous. You can set yourself up well for the future, or ruin your existing investments and take a huge backward step. But more on that later. Okay, so let's have a look at what's actually happening in the stock market. The Australian stock market, or the ASX, last peaked around Valentine's Day 2020, so that's February 14. US markets like the Dow Jones Industrial Average, the Nasdaq and the S&P 500 also peaked around that time, funnily enough. But since then, the world has been gripped by fear over a certain disease that I cannot name on YouTube for fear of getting my video excommunicated by the almighty YouTube algorithm. It's the fear and uncertainty surrounding this global problem that is tanking the stock markets, both in Australia and in the US and around the world. So here is a graph of the Australian ASX 200 stock market index. Likewise, here is a similar graph of the US Dow Jones Industrial Average. As you can see, we are at record lows for both, multi-year lows in fact. So you might be wondering, what on earth do we do in a time like this? As I said earlier, it's a very, very scary time, and people are very worried about the money that they have saved up and invested in the stock market. But in times like this, I always like to draw inspiration from the great Warren Buffett, chairman and CEO of his company, Berkshire Hathaway. One of Warren Buffett's most famous quotes is to be greedy when others are fearful, and fearful when others are greedy. It doesn't take a vast understanding of the current situation to know that people are very, very fearful right now. And therefore, according to Mr. Buffett, it's a great time to be greedy. Now, I just want to say that the very worst thing you can do in a time like this is sell your existing shares now. Whether that's because you're worried about your shares going further down in value, or because you have an idea that you will sell your shares now and buy back when they're cheaper. These are both fallacies, guys. Even on good days, the share market is extremely hard and impossible to predict. And as the week we've just had has shown us, it's an even worse time to try and do this. There's such high volatility in the markets. We've seen some of the biggest falls in the stock market in history, and some of the biggest gains as well, all in 1 week. Thinking you can somehow accurately time your entries and exits into a market like this is truly a fool's game. So, here's what I've been doing. I haven't sold a single share for one. Now, I don't enjoy watching the shares that I already have in my own portfolio go down in value, but that does not mean that I think selling them is in any way a good idea. Now, I bought many of my current shares at a higher price than what they are now, in fact, most of them. So if they're being offered at a lower price back to me, why would I sell them? Why would I accept that price? That would just lock me into a loss that I can never get back. Now, I know that it's really hard to see the market go down. I know it's really hard seeing all the panic out there. I know it's really hard seeing all the headlines screaming that this is the end of the world and markets are only going to go down further. But I'm just sitting tight and watching some of the companies that I've been watching for the last few years go on sale. So let's take a look at some big name Australian shares and US shares that might fall into this category. In Australia, we have the big ASX banks at levels not seen since the depths of the GFC. National Australia Bank and Westpac have both gone under $15 a share last week, and Westpac's current dividend yield is nearly 12%. Growth shares like Afterpay and Altium are at multi-year lows, and even CSL has pulled back somewhat. Meanwhile, over in the US, we have some really exciting, high quality shares that I think are on sale big time. Apple was under $250 a share this week. Likewise with Alphabet, Google, nearly reaching $1,000 per share. Starbucks, a stock I've been buying myself, has fallen from nearly $100 a share to nearly $50 a share. Warren Buffett's company even, Berkshire Hathaway's Class B shares went under $170 this week, their lowest level since 2017. Even dividend aristocrats like Pepsi, Altria, and Coca-Cola, and even Procter & Gamble, all have been showing enormous and rare value in the last few weeks. These are all huge opportunities in my opinion and shouldn't be ignored. We don't know what the stock market will do next week, or next month, or next year, but if you see value like this, it should prick your ears up and get your heart rate going. Shares like Procter & Gamble and Coca-Cola don't often go on sale like we've just seen, so this might be a very lucrative long-term buying opportunity, particularly if you're a dividend investor. So, it might not feel like it, but I think the current investing share market environment is a very, very nice opportunity to really buy some shares that you might have been holding out from because they've been too expensive over the last couple of years. Now, these shares might go higher next week or next month, or they might go lower next week or next month. Frankly, guys, I don't really care. All I know is that they are very, very cheap in my opinion last week. And so that's how I think everyone should be treating this stock market crash. It's a great time to be buying, but a terrible time to be selling. Now, I understand that many of you might not have a lot of cash lying around, so just bear in mind that doing absolutely nothing is more than okay. In my opinion, the best way to be investing right now is to be buying shares, and the second best thing to be doing is nothing at all. Whatever you do, do not panic sell, because that is the single worst thing you can do at a time like this. And what we're seeing on the share market is very, very normal. Shares can't go up in a straight line forever, and they never do. And what we've been seeing over the last few years is a share market that's been hitting new all-time highs every few months. That is never sustainable, and a correction was always going to come. This one has just been triggered by a global health crisis. So I think now is the time to be bold. Remember why you're investing. No doubt you will have heard that these things can and will happen in the stock market eventually. The last month has just been solid proof of that, so don't blame yourself for not being able to predict it or for losing money. It's just all part of the deal. So ask yourself, if you can picture looking back at this difficult time, what would you rather have done? Or floated all your shares for a loss, or picked up some more of your favorite companies for a rock bottom price? I'll leave you with that thought, guys. Thanks so much for watching. I really appreciate it. If you haven't already, please consider subscribing or just leaving a like on your way out. It really does support my small channel and I really do appreciate it. Saying that, I will of course be back with some more videos soon, but for now, good night.